Welcome back to the channel, Financial Adventurers. Today, we're diving deep into a stock that's been screaming on our hard-to-borrow screener, BJDX Inc., trading under the ticker BJDX. We'll break down why this micro-cap healthcare company is catching attention for its extreme cost-to-borrow fees and what that could mean for potential short-squeeze dynamics. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on BJDX. BJDX Inc. operates in the healthcare and medical devices sector. With a market capitalization of just $1 million, it's a tiny company in a potentially massive field. BJDX focuses on its Symphony technology platform, which includes an analyzer and single-use protein detection cartridges designed to measure key diagnostic biomarkers in blood. In essence, they're developing tools for faster, more efficient medical diagnostics. Now, regarding recent price action, it's been a tough period for BJDX. Today, the stock is down 8.59%. Looking at the past 5 days, it's seen a decline of 2.19%, and over the last 30 days, BJDX has dropped a significant 32.8%. Highlight price drops volume-wise today saw 601,197 shares traded, which is relatively low compared to its 30-day average volume of 9,596,783 shares. This gives us a relative volume of just 0.1x its average, indicating subdued interest recently. What is cost to borrow and why it matters? Before we get further into BJDX, let's quickly explain what cost to borrow means, especially for beginners. When someone wants to short a stock, they first have to borrow shares, usually from a brokerage, and then immediately sell them. The goal is to buy those shares back later at a low price, return them to the lender, and pocket the difference. But borrowing isn't free. You pay a fee and interest rate to hold those borrowed shares. This is the cost to borrow, or CTB. Why does it matter? A high cost to borrow signals two things: either there's very high demand from short sellers to bet against the stock, or, more commonly, there's a very limited supply of shares available to borrow. When a stock CTB starts climbing into the hundreds of %, it indicates extreme scarcity. Yes, these fees are annualized, so 100% means it costs you the equivalent of the stock's price to borrow for a year. If you hold it for a day, you pay 1/365th of that. When it hits numbers like what we see with BJDX, it grabs serious attention. Why this stock is hard to borrow right now. This brings us directly to why BJDX BJDX landed on our hard-to-borrow screener. The annualized cost-to-borrow fee for BJDX currently stands a staggering 745.4%. Highlight 745.4%. That's an exceptionally high rate, telling us that finding shares to short BJDX right now is incredibly expensive. With an estimated float of only 0.9 million shares, BJDX has a very small number of shares available for public trading. When the float is tiny, any significant short interest or sudden buying pressure can have an outsized impact, and the supply of borrowable shares can dry up quickly, driving CTB through the roof. While the exact number of shares currently available to borrow is unknown, the 745.4% CTB fee speaks volumes about the scarcity. Squeeze mechanics explained. So, what happens when a stock is hard to borrow with such a high fee? This is where the short squeeze comes into play. A short squeeze occurs when a stock's price starts to rise unexpectedly. For short sellers who borrowed shares and sold them, this rise means their position is losing money. If the price continues to climb, and especially if the cost to borrow is extremely high like with BJDX, the financial pressure on short sellers intensifies. They might be forced to buy back shares to cover their short positions, locking in a loss rather than letting it get worse, or simply to stop paying those exorbitant borrow fees. This mandatory buying to cover creates additional buying pressure, which pushes the price even higher, trapping more short sellers, and creating a feedback loop or short squeeze. Our internal composite squeeze score for BJDX is 40.5 out of 100, which indicates some factors are aligning, but it's certainly not a guarantee. It's crucial to remember that a high cost to borrow does not guarantee a squeeze. It can also mean short sellers have strong conviction and are willing to pay a premium to stay short, believing the stock will eventually fall. Dilution risk check. One critical factor that can make or break a short squeeze thesis is dilution. Dilution happens when a company issues new shares, increasing the total number of shares outstanding. If a company undergoing a potential squeeze issues millions of new shares, it essentially floods the market with supply, absorbing any buying pressure and making it much harder for the stock price to climb. New shares also give short sellers more opportunities to cover their positions without driving up the price. For BJDX, our checks found no recent diluted SEC filings, no -1s, -3s, or 424 BS in the last 90 days. Furthermore, there has been no recent reverse split found for BJDX in our look-back window. This is a positive sign, as it means there aren't immediate, obvious mechanisms currently in play that would dilute existing shareholders and potentially negate a short squeeze, even with the incredibly high cost to borrow. Let's take a quick pause here for our disclaimer. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you be watching if you're interested in BJDX? 1. Volume spikes. BJDX's current relative volume is 0.1x its average. A true squeeze catalyst would likely see a massive surge in trading volume, indicating renewed interest and buying pressure. 2. Price reversal. The stock has been trending down significantly over the last 30 days. Look for a strong reversal in price action, breaking above key technical levels. 3. Borrow supply. While we don't have real-time borrow availability, a sudden decrease in available shares on your brokerage platform could signal increasing short interest or dwindling supply. 4. Company news. Any positive news from BJDX regarding their Symphony platform or clinical developments could act as a catalyst. Remember, BJDX is a microcap company with a very low market cap of $1 million, making it inherently volatile and high risk. BJDX, Inc. BJDX presents a fascinating case study in the world of hard-to-borrow stocks, primarily driven by its staggering 745.4% annualized cost-to-borrow fee and tiny 0.9 million share float. While recent price action and volume have been subdued, these underlying mechanics illustrate the extreme pressure short sellers would face if a strong bullish catalyst were to emerge. The absence of recent dilution or reverse splits is also a factor worth noting. As always, this is for educational purposes to understand the mechanics of short squeezes and hard-to-borrow situations. If you found this deep dive into BJDX insightful, please hit that like button, subscribe for more content on hard-to-borrow stocks, and let us know in the comments below what other tickers you'd like us to analyze. Thanks for watching, and we'll see you next time.